Good morning, traders, and welcome to the morning update here from Phoenix Blue. This is Mark Owen speaking, and we're just going to have a quick run through of the markets and news that's already been released from the Bank of Australia and from New Zealand overnight. Okay, so first things we had were building approvals and trade balance from Australia, which came in at worse than expected, which should have had negative impact on the Australian dollar. It did briefly. And then at 4 a.m. this morning, we had inflation expectations quarter on quarter from Kiwi, or New Zealand dollar, we should say, which came in slightly better than expected, which should hold the Kiwi in relative strength. It should hold the Kiwi with a bit more strength in the market, as the data coming out of New Zealand has been relatively good over the coming months, over the past months, I should say. Then at 5:30 a.m. this morning, we had the cash rate or interest rate statement coming from the RBA. It was widely expected that they were going to do a rate cut, and they didn't disappoint. If we look at what's happened at the market in a minute, you'll see that this was obviously priced in because it didn't really have the impact that a normal rate cut would have. However, has a lot of that got to do with what happened with the FOMC and the dollar being very strong, very weak, I should say, or people waiting until non-farm payroll to see what actually comes out with the US being data dependent? Next major news we've got throughout today is construction PMI from GBP. That's at 9:30 a.m. Now, you can see that the previous number came in at 46 and the forecast is 44.2. The downside to this is any number below 50 is showing contraction, not expansion. So anything worse than 44.2 is going to have a very negative impact, I would have thought, on sterling. With all Brexit and Article 50, will we, won't we survive? All this negativity over sterling right now. The last thing we need is bad data coming out. So if you look at what's happened in sterling, we'll go to the charts shortly, is that the market since Brexit has been very much range bound between a couple of levels, which we'll show you, and then the next major news, which is tentative, it usually comes out somewhere between 2 p.m. and 4 p.m. Sterling time, is the GDT, which is the Dairy Price Index. Now, this has a big impact on the New Zealand dollar because it's their biggest export. It's what controls their economy. So if we see a fluctuation in this, we can see some wild swings in the Dairy Price Index. So this could have an impact on the New Zealand dollar later today. Okay, so markets we're going to focus on right now. We've got the Nikkei initially. So what we can see here is the Nikkei is working in a relatively downward channel with a base at around 15,000. We can see that over the last, this is a weekly chart by the way, we can see that over the last few weeks it's been respecting this sort of trend line here, which came up, tested it, and we did expect to see some either a break and close above this to look for longs. However, the Bank of Japan disappointed with the stimulus packages and moving forward on how they were going to look at, let's say, decreasing or devaluing their currency. So that's had a negative impact on the Nikkei. So we can probably expect to see the Nikkei come down, at least test 15.8, 15.750, which is these highs through here. And if we look at this on a smaller time frame, it's where there was a double bottom form. It's a neckline. So I would expect the Nikkei to come down, test 15.8 at least. If we break through that level, it's going to come down, test 15,000. The dollar index, well, I've highlighted on here when the FOMC statement came out. What we can see is that the dollar index was working in this channel. It was up at resistance. So it was going to take some kind of hawkish statement from the FOMC to break through this channel here. Yet again, they tried to mutter some hawkish sentiment in there, saying that basically they were data dependent and the external implications of Brexit and worldwide macro data wasn't going to affect their decision. However, you can see that right now that it's been priced in that no rate hike for September predominantly, and I think if we get definitely if we get bad non-farm payroll numbers this month, there'll be no rate hike in September, and more than likely probably won't be in December. But if we can get a couple of, if we can get another positive numbers from NFP, then that'll be two consecutive decent numbers from non-farm payroll. So we might see some strength coming in, which would be nice if we can see this market. We're at a little bit of a level now, but I'd expect this to potentially carry on selling off. If we can see that sell off into the bottom of this channel, it'll give us a nice buying opportunity come potentially next week for the dollar. So that'll be something that we'll be looking at here. If that is the case, we'll see a continued sell-off in dollar yen. We'll be looking for this market to test the 100 area yet again. We're seeing after the huge sell-off on Friday, Monday had a nice little steady inside day. Today we've broken the high of the inside day and now we're trading just below it. So I'd expect to see further downside on dollar yen and test the 100 area before we might see some sort of correction on dollar yen, whether it's going to be an intervention play or whether it just be profit taking. Aussie dollar, well, this is what we were looking at. We can see the Aussie dollars being in consolidation phase, i.e. we're getting lower highs on the weekly chart and higher lows. What we were looking for was a rally up into the upper trend line to sell off. We are bearish Aussie dollar. We're looking to trade this market short. Obviously, the sentiment from the Bank of Australia, Governor Stevens, reducing interest rates adds to this. Now, if we look, this big candle here, this is the 5 a.m. candle. You can see that when the rate announcement was announced that they were cutting interest rates, it had an instant sell-off, but only to come back and gather pace, and it's starting to rally. So I'm probably going to expect to see that Aussie dollar might come up and test the 76.50 area yet again before we might get that correction, which will coincide with seeing the dollar sell off. But again, really it's a week we need to be cautious with non-farm payroll. Trading the dollar, it's predominantly, I think, a commodity-based week right now. If you are going to trade anything on FX, I think you have to be in and out during the day. I don't think there's going to be a sustained sort of trend this week, unless you're talking dollar yen. I think we could see some continuation there. So this is sterling or cable. This is the market since Brexit. Okay. Now what we're looking at here is a 1 hour chart. I'm just trying to show you that the market really hasn't done anything, and especially over the last 8 days, which is this section here. Okay, this section here, which is operating between a sort of 132.50 and a 131, 150 pip, 200 pip range, which is nothing. So I think when we get the announcements out from Bank of England on Thursday, we should see some sort of direction, one way or the other. I think more people are anticipating a negative sentiment from the Bank of England, whether it's going to be quantitative easing or whether it's going to be a reduction in rates, or maybe they're not going to imply that just yet, but it might just be the wording on what they're going to say on how they expect to judge the implications of Brexit. So that's the thing we've got to watch out for. What do they actually say, and how are they going to look at protecting sterling and our economy? What are they going to put in place? So that's the main thing there. Okay, so we're looking at palladium, XPD. We've just sold that this morning. It's come into our sell zone area. We've got a commitment of traders report signal. It did break out of this channel we were looking at. It's been an aggressive move this last couple of months. It's been a really aggressive move, which is what we like to see coming into a commitment of traders signal. So it's come up into our zone. We've taken a short entry with quite an aggressive stop. We'll be looking at targeting around the 630, 626 area before we'll be looking at potentially trading this back long again. So this is a trade we've taken this morning, so you can have a look at that particular market. And the other trade we've taken this morning is cotton. So what we're looking at here is the market. Ideally, I would have liked to have seen it come a little bit higher, testing this little bit of structure here, but we've put our stops in and around that zone. Again, it's a commitment to traders signal, but what we've done is it's quite an aggressive entry again. As you can tell, I like to take my entries quite early. What I've seen here on the 4-hour chart is a triple top formation, and we just sold underneath below this 4-hour candle here, and we put our stops quite a way out of the way on this. It's a very aggressive entry, but we've put our stops above structure now, and you can see where our targets are. We've got a target first down here at 66 and then another one down at 58. Huge risk-reward profile on this. Could potentially be a great trade, but it'll be one we'll look to manage over a period of weeks stroke months. So that's it from the markets and the news today. What we do have again is we've got another trading event on August the 24th. It's a 4-hour event. It is held here in London. If it's something that you'd like to attend, it's free to attend, but you must go to our website or Eventbrite. Reserve your seat because it is limited availability. What we go through in the event is you're going to meet a few of our traders. You'll meet myself, Tom Colley, and Nishal Patel, who will be hosting the event. And during that event, what you're going to find out is exactly what we do at Phoenix Blue and the services that we do. Plus, you're going to have a couple of hours of live trading. And this is so you can see how we do it, what we do, and basically how you could become a part of it. If that sounds of interest to you, please make sure to register. It'll be a great 4 hours. You can ask us anything. The books are open. We're very, very transparent. So we look forward to seeing you. If there's anyone from Norway listening, we've got an event in Norway on the 18th of August. Make sure you go to our website or Phoenix Blue Trading Norway page on Facebook. You'll be able to see the events there. We're looking forward to coming over to Norway. It's our first event as Phoenix Blue over there, so it should be very, very good. Looking forward to meeting all of you. If you've got any questions, please don't hesitate to email info@phoenixblue.co.uk, or if you want any personal questions to myself about this video, make sure to email mark@phoenixblue.co.uk. We will be doing a little introduction video on commitment to traders over the next week or two on why we use it and how it can be beneficial to you in your trading. If you'd like to register for that video, please email info@phoenixblue.co.uk or mark@phoenixblue.co.uk, and we'll put you on the mailing list for that video because it'll be an invite only that will be sent out to those that watch. Okay, guys, have a great trading day, and remember, be careful this week. It's low liquidity, it is summer, and it's non-farm payroll week. Okay, take care. All the best.